Rivian Automotive, ticker symbol RIVN. You see, this stock, it surged almost 25% on January 3rd.
Yeah.
And then took a 5% dip just 10 days later.
Wow.
Quite a roller coaster ride for investors.
It is.
So what's driving this volatility?
Hmm.
Is this a stock worth watching?
Oh, I think so.
Well, on today's episode of Investing Talk Podcast, we're going to unpack the recent news and try to figure out what's really going on with Rivian.
Yeah, it is a fascinating case.
Yeah.
Especially because Rivian is a major player in the electric vehicle market.
Right?
And EVs are a hot topic right now.
Yeah, they are.
They've had their share of wins and losses, so understanding the whole picture is key for any investor.
Absolutely. So let's start with the positive.
Okay.
Rivian exceeded expectations by a long shot
They did.
when it came to their 2024 production and delivery numbers.
Absolutely.
They produced almost 50,000 vehicles and delivered over 51,000,
Right.
blowing past their initial targets.
They did.
And their fourth quarter was particularly strong, with production reaching almost 13,000 vehicles and delivery surpassing 14,000.
Wow.
So,
You know what makes this even more impressive?
what's that?
Is that they initially had to revise their production goals earlier last year, likely due to the supply chain issues that have been plaguing the entire auto industry.
Right, yeah.
The fact that they not only met but exceeded their revised targets is a testament to their resilience and ability to navigate these challenges.
And the market seemed to agree that January 3rd surge was one of their best trading days ever. Investors clearly saw that as a sign of positive momentum.
Absolutely. Hitting those targets, especially in an emerging sector like electric vehicles where there's a lot of uncertainty, sends a powerful signal to the market.
Yeah.
It shows that Rivian is executing its plan and gaining traction in the EV market.
But then just 10 days later, the stock takes a dip. Down over 5%. Why? The sudden shift in sentiment.
Well, we have to consider the broader context.
Yeah.
The overall stock market has been a bit volatile lately, with the Federal Reserve's policies making investors a little jittery.
Makes sense.
Rising Treasury yields are also impacting stock performance in general.
Yeah.
So part of Rivian's decline might simply be a reflection of these larger market trends.
That makes sense. But we have to acknowledge that other EV stocks haven't experienced quite the same level of decline.
Right.
There must be more to the story than just overall market jitters.
Right, and this is where things get interesting.
Okay.
There was some insider selling by Rivian's CEO and CFO,
Oh, really?
totaling nearly 90,000 shares. While insider selling doesn't always indicate a problem, it does tend to raise eyebrows among investors.
It definitely makes you wonder.
Yeah.
If the people at the helm are selling, does that signal a lack of confidence in the company's future?
It could.
Is certainly something to consider.
It's definitely a piece of the puzzle. And on top of that, we have a number of analyst downgrades.
Oh, no.
Several analysts have revised their rating on Rivian's stock
Oh,
from outperform to neutral.
okay. That certainly doesn't sound promising. What are the analysts concerned about?
There are a few key concerns that are driving these downgrades.
Okay.
One is the potential for policy rollbacks that could impact EV regulations and subsidies. Governments worldwide have been incentivizing the adoption of electric vehicles,
Right.
but those incentives might not be around forever.
Right.
And if those subsidies disappear, it could have a ripple effect on the entire EV market, including Rivian.
So the concern is that Rivian's success is somewhat dependent on these government incentives.
Yeah.
And if those go away, their growth might slow down.
Precisely.
Okay.
Another concern is those workplace harassment lawsuits that were filed by former employees.
Oh.
These are serious allegations, and any legal battle brings a degree of uncertainty and can potentially damage a company's reputation. Investors are understandably wary of such situations.
So we have broader market concerns, insider selling, analyst downgrades, and now legal issues.
Yeah.
That's a lot of headwinds for Rivian to navigate.
It certainly creates a complex picture.
It does.
But let's not forget
that
they also just achieved record production and deliveries.
Right.
And the global demand for electric vehicles is undeniably growing.
Yeah.
Rivian is strategically positioned in the increasingly popular truck and SUV segment.
Yeah.
So while there are risks, there's also significant potential.
Right.
It all boils down to weighing these factors and assessing whether the potential rewards outweigh the risks.
All right, let's dive into some technical analysis to try and make sense of Rivian's current stock position.
Okay.
What's the latest on their stock price?
As of January 14th, Rivian closed at $13.49.
Okay.
Now, if we look at the short-term moving averages, it does appear somewhat bearish. The stock price is currently trading below these averages, suggesting a potential for continued downward momentum in the near term.
But I'm guessing the long-term outlook might tell a different story.
That's right. Looking at the long-term moving averages paints a slightly more bullish picture.
Okay.
Rivian is actually trading above these averages, which suggests there could be some upward potential over a longer time frame.
So short-term bearish, long-term potentially bullish. What are other indicators telling us? What about the RSI? What insights can we gain from that?
The RSI.
Yeah.
A key tool for technical analysis.
Yep.
It stands for Relative Strength Index.
Right.
And essentially measures the magnitude of recent price changes to help us gauge whether a stock is overbought or oversold.
Okay.
In Rivian's case, the RSI is currently sitting at 51.20.
Okay.
This places it right in the neutral zone, meaning it's neither overbought nor oversold.
So not much of a clear signal there.
Not from that one, no.
So we're getting mixed signals. Are there any other indicators worth paying attention to?
Absolutely. The MACD, which stands for Moving Average Convergence Divergence, is currently flashing a potential buy signal.
Okay.
Which is encouraging.
That is.
The Williams percent R, another momentum indicator, is approaching oversold territory.
Okay.
This could potentially be interpreted as a buying opportunity for some investors.
So no clear consensus from the technical analysis, just a lot of mixed signals.
That's right.
What's the main takeaway for investors trying to make sense of all this?
The key takeaway is that the technical indicators are giving us both bullish and bearish signals.
Okay.
Which means we need to remain vigilant and carefully monitor how things unfold.
Right.
Rivian's upcoming earnings report will be particularly crucial in providing more clarity.
Right. Those earnings will definitely be something to watch.
Yeah.
But before we delve into those projections, let's step back and look at the bigger picture.
Okay.
Where does Rivian fit into the overall EV landscape?
That's a crucial question because it helps us understand the potential here.
Right.
The global shift towards sustainable transportation is a major trend.
It is.
And the demand for electric vehicles is only going to continue to climb.
Yeah.
Rivian's strategic focus on the truck and SUV segment, a highly popular category, is a smart move.
Yeah, and their partnerships with Amazon and Volkswagen are also major assets.
Absolutely.
Right.
The Amazon partnership, specifically their deal to supply electric delivery vans, is a significant source of revenue for Rivian.
It is, yeah.
It also gives them a strong foothold in the rapidly growing market for commercial EVs.
Right.
The Volkswagen partnership brings a wealth of manufacturing expertise and a global reach that will be invaluable as Rivian expands its operations.
And so even though Rivian is currently experiencing losses, the long-term growth potential seems undeniable, especially given their strategic positioning within the EV market and their strong partnerships.
That's a critical point for investors to keep in mind.
Yeah.
Rivian is still a young company.
Right.
And it takes time to establish profitability, especially in a capital-intensive industry like automotive manufacturing.
Let's move on to those earnings projections.
Okay.
What can we expect from Rivian's upcoming report?
Analysts are currently projecting a loss of 67 cents per share.
Okay.
Now, I know hearing about a loss might not sound positive,
Right.
but here's the catch.
Okay.
This projected loss represents a year-over-year improvement of over 50%.
So they're on a trajectory of reducing their losses.
Exactly.
That's a positive sign,
Yeah.
indicating they're moving in the right direction.
And let's not forget that Rivian actually surpassed revenue expectations and reported a narrower than anticipated loss in their last quarterly report, Q3 of 2024.
Right.
So there's a chance they might surprise us again with better than expected results.
We've covered a lot of ground here.
We have.
From Rivian's impressive production numbers to the stock's recent fluctuations,
Yeah.
the insider selling, the analyst downgrades, the legal challenges, and the technical analysis.
Absolutely.
And of course, we've also considered the overall trends in the EV market
Yeah.
and what they mean for Rivian's future.
Right.
It's a lot to take in,
It is.
and it highlights just how complex Rivian's situation is.
It does.
They have a lot working in their favor,
Yeah.
but they're also facing some significant challenges.
Right.
So for our listeners who are trying to navigate this complex landscape, what's the bottom line? What should they be taking away from all of this information?
The bottom line is that Rivian presents a high-risk, high-reward scenario for investors.
Okay.
There's significant potential for them to become a dominant force in the electric vehicle market.
Right.
But there are also a lot of unknowns and potential pitfalls.
So should investors buy, sell, or hold?
Well,
What's the verdict?
that's a decision each investor has to make for themselves based on their individual risk tolerance and investment goals.
Okay.
But here's something to ponder. Rivian stock has significantly dropped from its all-time highs.
Yeah.
Does this present a potential buying opportunity for those who have confidence in the long-term future of EVs and believe Rivian is well-positioned for success? Or are the current warning signs too concerning to ignore?
That's the million-dollar question.
It is.
And only time will tell what the future holds for Rivian.
That's right. Welcome back to Investing Talk Podcast.
Thanks for having me back.
You know, as we unpack Rivian's story, it's interesting to see how their journey reflects the broader trends and challenges
Yeah.
facing the entire electric vehicle market.
I agree there's a seismic shift happening towards sustainable transportation,
There is.
but that shift is happening alongside market volatility and economic uncertainty.
Exactly. And for a company like Rivian,
Right.
which is still in its early stages of growth,
Yeah.
those challenges are amplified.
Right.
They're dealing with supply chain disruptions,
Mhm.
fluctuating interest rates, and fierce competition,
Ab-
all while trying to scale up production
Right.
and pave a path to profitability.
That's a lot to handle.
It is.
Makes sense that investors might be feeling a bit hesitant.
Understandably.
But let's shift gears and focus on Rivian's financials for a bit.
Okay.
We already touched on the projected loss per share
Right.
for the upcoming earnings report.
Right.
But what other financial metrics should investors keep an eye on?
Revenue is always a key metric to watch.
Okay.
Analysts will be eager to see if Rivian is continuing to grow its top line,
Okay.
which essentially means generating more income by selling more vehicles.
Makes sense.
Profitability might be the ultimate goal.
Right.
But for a company like Rivian,
Yeah.
which is heavily investing in its growth, demonstrating consistent revenue growth
Yeah.
is a critical indicator of their progress.
So how has Rivian's revenue been trending recently? Have they shown consistent growth?
Actually, their revenue growth has been quite impressive.
Oh, okay, good.
In their most recent quarter, Q3 of 2024, Rivian exceeded analysts' revenue expectations, suggesting robust demand for their vehicles and progress in scaling up their production capabilities.
That's encouraging to hear.
It is.
But we can't ignore the fact that they're still operating at a loss.
Right?
How do we reconcile this strong revenue growth
Yeah.
with the continued losses?
That's where it gets a bit nuanced.
Okay.
Rivian, like many high-growth companies, is prioritizing expansion
Right.
over immediate profitability.
Yeah.
They're pouring resources into research and development,
Yeah.
significantly expanding their manufacturing capacity,
Right.
and building out the charging infrastructure needed to support their vehicles.
Makes sense.
All of these are essential investments
Right.
for long-term success, but they do come with short-term costs.
So it's a classic case of you have to spend money to make money.
It is.
But the question is, how long can Rivian sustain these losses before investors start getting impatient?
That's the million-dollar question, and there's no easy answer.
Right.
Investors are generally willing to tolerate losses
Yeah.
for a certain period,
Right.
especially if they see a clear roadmap to profitability.
Yeah.
But if the losses continue to mount without a clear path towards profitability,
Right.
or if their growth strategy shows signs of faltering, investor confidence could start to waver.
So what key elements should investors look for in Rivian's upcoming earnings report
Yeah,
to determine whether they're on the right track?
right.
What signals would indicate they're effectively navigating these challenges?
First and foremost, continued strong revenue growth
Okay.
is crucial.
Right.
Demonstrating they can consistently sell more vehicles and expand their market share will be a positive sign.
Okay.
Second, investors will be looking for evidence of progress towards profitability.
Right.
This could include improvements in their gross margins, strategic reductions in operating expenses, or announcements of new partnerships that could further boost revenue.
Speaking of partnerships, we've highlighted the importance of Rivian's collaborations
Yes.
with Amazon and Volkswagen.
Right.
How are these partnerships playing out in practice? Are they delivering the expected benefits?
These partnerships are absolutely vital
Okay.
to Rivian's long-term vision.
Okay.
The agreement with Amazon to supply electric delivery vans is a significant revenue stream and provides a solid entry point into the burgeoning market for commercial EVs.
Right.
Their partnership with Volkswagen offers access to their extensive manufacturing expertise and global distribution network, which are invaluable as Rivian seeks to scale its operations efficiently.
So these partnerships are more than just revenue streams.
They are.
They're strategic alliances
They are?
that help Rivian streamline their operations and expand their reach.
Precisely.
Okay.
Scaling up production efficiently
Hmm.
is one of the biggest hurdles for any electric vehicle manufacturer. The demand for EVs is there,
It is.
but the ability to mass produce
Yeah.
and deliver those vehicles
Right.
is what separates the successful players
Right.
from the rest.
So solid partnerships are clearly essential in this industry.
There.
But what about the competitive landscape?
Mm,
Rivian isn't operating in a vacuum.
right.
They're up against established giants like Ford and General Motors,
Mm-hmm.
not to mention other EV startups
Right.
like Lucid and Fisker.
Right.
How is Rivian differentiating itself in this crowded and competitive market?
That's where their focus on trucks and SUVs becomes a key differentiator.
Okay.
The current EV market
Hmm.
is heavily saturated with sedans and hatchbacks.
Right.
Rivian is strategically targeting
Mm.
the electric truck and SUV segment,
Right.
which is still relatively untapped, especially in the US, where these vehicle types are incredibly popular.
Right. It's a smart move, particularly with the recent surge in gas prices.
It is, yeah.
People are actively seeking more fuel-efficient options.
Mm-hmm.
And an electric truck or SUV could be a very attractive alternative.
Absolutely.
Yeah.
And Rivian isn't simply creating electric trucks and SUVs.
Right.
They're developing high-performance, adventure-oriented vehicles that cater to a specific customer base willing to pay a premium for quality and capability.
So they're carving out a niche
They are.
within a niche.
Yeah.
But is this a sustainable strategy?
Well,
Is this niche large enough to support their growth ambitions?
it's a calculated risk,
Okay.
but one with significant potential.
Right.
Think of Tesla in their early days.
Mm-hmm.
They started with the Roadster, a high-performance sports car.
Right.
That appealed to a relatively small
Mhm.
but affluent segment.
Right.
As they gained momentum
Yeah.
and scaled production,
Hmm.
they were able to expand
Right.
into more mass market segments.
So Rivian is hoping to replicate that model, starting with a premium product that generates buzz and positions them as a leader in a specific EV segment,
Mm-hmm.
and then gradually expanding their offerings
Yeah.
as they grow.
Exactly.
Okay.
They're starting with a high-end product to establish their brand and cultivate a loyal customer base.
Right.
Then, as they achieve greater scale and reduce production costs, they can potentially introduce more affordable models
Yeah.
that cater to a broader market.
It's a long-term strategy
It is.
that requires patience and significant capital.
It does.
Does Rivian have the resources to pull this off?
Well, that's another critical question.
It is.
They've secured billions of dollars in funding
Mm.
from investors, including major players like Amazon and Ford.
Right.
But developing and manufacturing electric vehicles is a notoriously expensive endeavor.
It is.
So it's a race against time.
It is.
They need to accelerate their production,
Yeah.
drive revenue growth,
Mm-hmm.
and ultimately achieve profitability
Right.
before their resources dwindle.
So their upcoming earnings report
Yeah,
will be a pivotal moment.
it will be.
Investors will be scrutinizing every detail,
Yeah.
looking for signs of progress towards these goals.
Exactly. The stakes are high.
Yeah.
But as we've discussed, Rivian also has a lot working in its favor.
Right.
They're operating in a rapidly expanding market.
Yes.
They've forged powerful partnerships,
Mm.
and they're developing unique products
Right.
that set them apart from the competition.
The electric vehicle market is still in its early stages,
It is.
with immense potential for growth.
Yes.
Rivian has the potential to be a major player,
Yeah.
but they need to execute their strategy flawlessly to capitalize on this opportunity.
Their upcoming earnings report will offer valuable insights into whether they're on track to achieve their ambitious goals or whether they're facing more turbulent waters ahead.
Right.
Investors will be watching very closely.
We'll be right there with them, carefully analyzing those earnings and sharing our insights. But now,
Yeah?
for our listeners who are particularly keen to understand the specific metrics to focus on.
Yeah.
in the upcoming earnings report.
Let's shift our attention to those details next.
Let's do it.
Stay with us.
Welcome back to Investing Talk Podcast. We've been deep in the world of Rivian Automotive, ticker symbol RIVNN. And now it's time to really zoom in on those upcoming earnings.
Absolutely. Those numbers are going to tell a crucial part of the Rivian story. We know revenue is important.
Yeah.
But what other metrics should our listeners have on their radar?
I'm particularly interested in gross margin.
Okay.
It's a fundamental measure of profitability,
Right.
showing how much money Rivian is making on each vehicle after accounting for production costs.
Gross margin is definitely a key metric for investors to watch,
Right.
especially for a company like Rivian that's still in the early stages of scaling production. Just having a positive gross margin is a good starting point.
Right.
As they ramp up production and streamline their processes, we'd expect to see that margin expand.
So the higher the gross margin, the better.
Right.
Indicating they're becoming more efficient.
Exactly.
What else should we be looking at?
Keeping a close eye on operating expenses is crucial.
Okay.
These include costs like marketing research and development and general administrative expenses. It's natural for these expenses to increase as Rivian grows.
Right.
But investors will want to see evidence that they're managing these costs carefully.
It's a balancing act.
Yeah.
You need to invest in growth, but you also need to ensure that your expenses aren't growing faster than your revenue.
Right.
What other financial indicators should we pay attention to?
Cash flow is another vital metric to monitor.
Okay.
Essentially, cash flow tells us how much cash the company is generating from its operations.
Right.
Positive cash flow indicates that Rivian is bringing in more cash than it's spending,
Good.
which provides them with greater financial flexibility to invest in growth and navigate any potential economic headwinds.
So we're looking for robust revenue growth, a healthy and expanding gross margin controlled operating expenses, and positive cash flow. These are the financial indicators that will paint a picture of Rivian's health and progress.
Yes.
What kind of guidance do you expect from Rivian regarding their future?
Investors will be eager to hear Rivian's projections for the remainder of the year and beyond.
Right.
They'll be looking for specifics on how many vehicles they plan to produce and deliver their revenue forecasts and whether they anticipate reaching profitability in the foreseeable future.
It's a complex situation
It is.
with a lot of moving parts. But overall, it seems like Rivian is at a pivotal moment in its journey. They have the potential to be a major player in the EV space, but flawless execution is paramount to their success.
I completely agree. Rivian's story is still unfolding, and the upcoming earnings report will be a significant chapter in that narrative. It will give investors valuable insights into whether Rivian is on track to achieve its ambitious goals or whether there are more bumps in the road ahead.
It's an exciting, albeit somewhat unpredictable journey. We'll certainly be keeping a close eye on Rivian's progress and sharing our analysis with you. In the meantime, we want to hear from you, our listeners. What are your thoughts on Rivian's prospects? Are you bullish or bearish on this electric vehicle maker? Let us know your thoughts in the comments section below.
And remember, don't forget to subscribe to our channel and hit that notification bell so you don't miss out on any of our future Investing Talk podcast episodes. We have plenty more deep dives planned covering everything from the latest market trends to promising investment opportunities.
Thanks for joining us on this episode of Investing Talk Podcast, and until next time, happy investing.